What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of an analysis on what the heck happened with the Ortex data for today with AMC in terms of those shares on loan. We cracked 195 million, but yesterday we saw some very interesting things happening. We're going to look at some comments from Ortex, go over and explain to you guys kind of what I basically told you was going to happen in yesterday's video, and we saw that play out today. It happened very, very, very quickly. So I want to give you guys an update on that. And then we have some interesting things to talk about in terms of hedge funds. We have another fund, actually two funds that are actually collapsing. And then we have hedge funds getting liquidated and liquidating their portfolios at the fastest rate on record. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So today, guys, AMC closed the day at $12.77 with a high of $12.97, almost cracking that 13, up 7.13% today. Very, very solid day, coming off a pretty red streak on AMC. Now, when we come over and take a look at this on some of the longer time frames over here, we are seeing an interesting story start to play out with AMC that I do want to talk with you guys about. So we did see that 4-hour MACD cross here. We are starting to see these inflection points in the 13 EMA starting to curl back up. We could end up seeing this cross coming in the near future, and I would love to see some candles above and some momentum above this 200 EMA to really signify to me that we are on a bullish trend upward, and that is most likely when I'm going to start buying more call contracts on AMC with some time. Now, talking about what happened with Ortex today, let me just give this a quick refresh so we have the most up-to-date and accurate data from what we are given by these exchanges that are reporting this short interest. 22.92% estimated short interest. We have 20.14% average cost to borrow, 33.01% max. Now, if you remember yesterday, we saw the shares on loan number and the short interest number come down significantly. Now, we saw it go down to about 159 million, and today it's back up to 195 million. Remember what we were talking about in yesterday's video about how it was very likely and possible that these big institutions were locking in their cost to borrow about a month ago when we were seeing these very, very, very low cost of borrows back here in that 1.76 range. They might have been locking in their cost to borrow at a higher rate, but with what we are seeing now with these super high cost of borrows, the average cost of borrow 20.14%, well, these lending institutions are saying, well, we are lending these shares out at a locked-in rate of potentially 3%. We could easily be lending these shares out and making much more on these loans at 20 or 33% that we are seeing here. Now, I did not expect this to happen this quickly, to see these shares on loan come right back up. And again, it's possible that there were some glitches going on, or as Ortex calls it, as we're going to see here, for this number of shares to be returned, relent in 24 hours implies an administrative exercise rather than a strategic short selling strategy, which would make sense seeing that there weren't a lot of those shares that were actually shorted that were recalled. It was a lot of the ones that were out on loan, but had not actually been shorted yet. So still very, very crazy things going on here, but it is very possible that these shares have gone out on loan at a higher cost to borrow with now 195 million shares on loan, which is going to put even more strain on the securities lending market in AMC, and we could see those cost of borrows shoot up even more. Now, let's get into this situation with these hedge funds going down. We are seeing crypto funds go down. We're seeing equity funds go down, and a lot of hedge fund liquidation. But before we get into that, make sure you guys engage with the video, hit that like button down below. And if you do have a comment or a question about anything that we saw today, make sure you comment that down below as well. So when we come over and take a look at this article right here, Tiger Legatus, whatever you want to call it, closes its doors after 13 years. Now, the average lifetime of a hedge fund is much shorter than 13 years. So it is very, very impressive that this fund has stayed open for this long, but all of them are starting to come to an end. Tiger Legatus, a hedge fund backed by Tiger Fund Management legend Julian Robertson, has brought the curtain down on 13 years of trading following the worst ever start to a calendar year for equity funds, according to a report by the Financial Times. Again, guys, we are seeing these funds take very, very significant losses, and some of the reasons for that, when we take a look at the S&P 500 chart right here, we have not seen a whole lot of bullish action recently. We saw this cross down on the 13 EMA right here, 1348 cross down. We saw this cross down on the MACD as well, and we saw the SPY make a new, more recent low, meaning that a lot of these funds who are long the market right now are taking very, very significant losses. And again, when speaking about 1348, if you guys are interested in learning more about this strategy, make sure you check out that link down below. Prices are going to be going up in the next month because we are offering you real-time options data right from the source. We have over 40 private live streams every single month. But again, check that out if you are interested. Now, coming back over here, the Financial Times reports that equity funds have lost an average of 8% in the first 5 months of 2022, recording worse performance than in the opening months of the pandemic in 2020. Tiger Legatus has performed much better than his peers, seeing a fall of 2.8% in the first quarter and a 1% loss in 2021. Another so-called Tiger Cub, Tiger Global, lost 34% in the first quarter of 2022 and is now down 54%, while Maverick Capital is down by more than 34%. Obviously, these funds are taking significant losses, and this is not something that we need to be taking lightly over here. And again, this is happening in the crypto market as well. Cryptocurrency bloodbath threatens multi-billion-dollar hedge fund. Three Arrows Capital founder takes to Twitter to assuage fears after a 25% drop in the price of Bitcoin in a single day. Everybody is getting hit left and right. And with Powell coming out today, and honestly giving institutional investors, in my opinion, a little bit more of a reason to trust that the Fed is going to step up to the plate. Even then, we are still so far off the highs that a lot of these institutions were taking on a lot of leverage that they are still, there's really no escape for these funds at this point. They've had a lot of years of success and they have completely pissed it down the drain in these last 6 months. And then this isn't all, people. So we have Three Arrows Capital. We have that other Tiger fund taking significant losses as well. But when we come over to this Bloomberg tweet over here, Friday and Monday of this week and last week, hedge funds dumped stocks at the fastest pace on record. Now, when you think about institutional money ahead of a potential rate hike, now it is actually in reality, we did see that 75 basis point rate hike. The kind of thought process behind liquidating your portfolios doesn't make a whole lot of sense. What was most likely is on this drop down here that we saw in the SPY. Remember, we came all the way down here to about 380.50 before we saw that next leg up all the way to that 416 range. A lot of these funds were probably facing a lot of maintenance margin calls back down here. We saw this rip up. Oh, okay, they're doing all right at this point. And then we saw that market crack right back down. And these funds are still facing very, very significant losses and have to liquidate portions of their portfolios in order to meet these maintenance margin calls because they have been wildly reckless with their money. So that is going to wrap up this update on AMC and the broad market. If you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.